This is the Coronation Podcast.
Hello everyone, welcome to another episode of Coronation Podcast, where we discuss everything finance and investment. I'm your host today, Gbemisola Adelokiki, and today we are discussing a topic that has often gotten overlooked but is very, very important. It's about fixed income investing in Nigeria. So joining me today is Somkene Jipreze. So Somkene is a financial expert with years of experience in investment management. Somkene, it's fantastic to have you here today.
Yeah, thank you, Gbemisola. I'm excited to be here and I'm looking forward to bringing clarity to fixed income investing.
Awesome. So for our listeners today, our goal is simple. We just want to help you understand what fixed income investments are, why they matter, and how you can get started. So, all right, Somkene, let's start with the basics. When people hear fixed income, it sounds technical. So what really is fixed income? What is fixed income about?
Okay, so the first thing that we need to do is distinguish fixed income from fixed deposits, right? This is a common misconception where people think that the two are interchangeable. Fixed deposits, as we know, they are, short-term deposits with your bank or other financial institution where you deposit your money with them for somewhere between 1 month to 1 year, right? Mm-hmm. And you have a fixed interest rate that is given to your investment for that tenor. That is fixed deposits. Fixed income instruments, it refers primarily to what we also call bonds, and these are a long-term investment vehicle, right? Typically, they are upwards of 3 years, whereas, as I said, fixed deposits are capped at 1 year, right? So that is the first important distinguishment that we need to make. Secondly, fixed income investing is essentially you are lending your own personal money to an institution. Now, this institution can be your federal government, your state government. It could be a financial institution or another type of corporate body, right? Dangote, for example, or MTN, it could be any one of these types of institutions. And in return for borrowing money from you, they pay you a fixed rate of interest periodically across the entire term of the bond, across the lifetime of the bond. So whether that be 3 years, 5 years, 7 years, 10 years, or longer, right? You'll be guaranteed to receive this interest payments periodically.
Okay, thank you for that. So can you share some everyday examples of these fixed income investments?
Okay, yeah, I can definitely do that. So when we talk about these fixed income investments, we are talking about things like federal government bonds, state bonds, corporate bonds. Treasury bills also fall into this category. And then finally, we have fixed income mutual funds, right? Like the Coronation Fixed Income Fund.
Oh, okay.
And these mutual funds, essentially, fixed income mutual funds, they offer you all the benefits that come with investing in fixed income instruments without some of the, quote unquote, drawbacks. Mm-hmm. And they also offer professional management in terms of decision making and understanding what is good investments. Mm-hmm. And they are also there to help you diversify your portfolio where fixed income / bonds are concerned.
Okay, that sounds like they will be of great help. What would you say an investor should consider any of these fixed income investments you mentioned?
Okay, investors should consider fixed income investments firstly for stability and predictable returns, right? As I said, over the lifetime of the bond, you are essentially guaranteed a specific interest rate, and that is going to stay that way for however long you are holding that bond up until maturity. Bonds are also a relatively low risk investment, certainly much, much lower risk than investing in stocks in equity, right? They don't experience the same type of volatility on a daily, monthly or yearly basis, right? Mm-hmm. So due to the long-term nature of them, you gain the advantage of locking in those, attractive interest rates for an extended time. And they are guaranteed returns regardless of whatever state the market is in. So if the market is up this year, if it's down next year, you know that with your fixed income investment, your own returns are guaranteed, right? So you sort of insulate yourself against downtimes in markets, right? So for people who are looking to preserve their wealth and, earn like a steady return while they are doing that, is a fantastic choice. Additionally, these instruments, bonds, they are tradable, right? So there are additional gains that, investors in bonds can make that are outside of the interest payments that they receive. If the price of bonds go up, then you are going to make additional gains on your investments.
Okay, interesting. I love the sound of locking in funds regardless of what happens. But I would like a bit more clarity as to what you mentioned last. Tradable and bonds being tradable rather, and having a price. Can you shed more light on what you were explaining?
Okay, yeah. So we're getting a little bit deeper into it now. So I talked about fixed deposits earlier, right? So just to establish a base of comparison, when you get a fixed deposit, it belongs to you, the individual, right? You can't sell the fixed deposit that you own to another individual in exchange for cash, right? You have to hold it to maturity or terminate it with the institution that you have the fixed deposit with, but you cannot exchange it with another individual and then that individual now takes ownership of your deposit in exchange for your current cash need or whatever, right? So deposits are not tradable.
Okay.
And that is not the case for bonds, right? With your bond investment has a maturity date, right? But if you want to exit that investment before the maturity date comes, you are able to do so by selling your holding, whether a portion of it or the entirety of it, to another individual who is interested in that investment. So you can sell it on the secondary market where people are constantly buying and selling these units of their bonds. And that's just a thing that happens up until the maturity of the instrument, right? So that's how the tradability works. Now, if you are a person who decides that you just want to hold your bond all the way till maturity, then this feature of tradability and price, it is of no use to you as an investor because you are holding it to the end. So all you care about is the interest rates that you receive. And whatever the price that the bond holds, you are not affected by it. It does not affect the interest rates on it, right? It only matters if you are a person who has decided that they want to either buy into a bond that they don't have or sell a bond that they currently are holding, right? If you now choose to sell a bond that you're holding and the price is higher than where you initially bought it, then obviously just by simple arithmetic, you are making an additional profit, which is beyond the interest rates that you are already normally receiving.
Okay, thank you. But you mentioned something and I would just like to clarify something. Okay, so as an investor that really does not have time to manage my portfolio, I'm pretty busy, and at some point in this investment, I want to trade my bonds.
So your best bet is always to do it through professional services, right? Coronation is a fantastic avenue for you to be able to trade whatever bonds or other instruments that you have ownership over, right? We offer those services to help people manage their portfolios, whether they have bonds in them or any other instruments, and then we can help you to, if you wish to sell, we'll help you to do that. If you wish to buy, we can also help you to do that. And because of our professional expertise and in investment management and in trading, we know how to get you the best price available on the markets, right? This is what we do on a daily basis. So we are always best placed to help maximize your investments.
Okay, that's helpful. Thank you. One more question. So as one that's, okay, I want to open an account with Coronation. Regardless, I understand the type of investor that I am, and I know that at some point in this investment, I may want to opt out for whatever reason. Is it possible that I explain to my advisors my plan to opt out at some point? just so that you can monitor the market on my behalf and send me perhaps an instruction or a mail? Or do you send something regularly to cover what the market is doing? And if perhaps for investors that want to opt out or investors that have a plan, people like me that at some point will want to pull out, is there a material you share? Do you have something like that?
Okay, yes. So we have different things that will cater to depending on who you are, right? So first of all, at Coronation, we have a world-class research department, and they send out publications daily and weekly that cover the movements in the markets, right? So they are to keep people informed. And this is useful both to people who are current investors with us and people who aren't, right? It's just to show people this is what is available and this is what is happening in the market. Keep them apprised of the movements, both up and down, of either investments that they have or potential investments that they are interested in. Now, in the case where people actually do have investment with us, right? We produce reports on their investment and we share it with them periodically, right? It could be monthly, it could be quarterly, it is no less frequently than quarterly. So we inform them of the performance of their instruments. We also, in between all these reports, we are constantly in contact with our clients to let them know of investment opportunities or things that we think should be done on their investment so that we can help them maximize any positions that they've taken or new positions that we think would be of interest to them.
Interesting. That's impressive. Thank you. So now, considering Nigeria's economy, we know that it can be really, really volatile. So how does fixed income fit into this context? How do I edge myself against whatever is going on in the market?
Okay, so fixed income investment is an excellent shield against a lot of uncertainty, right? Whether that be currency fluctuations, whether that be inflation or inconsistent interest rates, because you are able to lock in your investments at a particular rate, it provides a sort of safety net over a long period of time. So it's always best to, if you have the opportunity, take advantage of investment opportunities in bonds so that you can, rest assured that, no matter what happens over a specified period of time, you are guaranteed to be gaining steady and, sort of promised returns in that period. They help you to protect your money against volatile interest rates while still offering you lucrative returns.
So who would you say that fixed income is best suited for?
I would say that fixed income investing is suitable for anyone, regardless of the size of investment that you want to make, right? It's perfect for young professionals who are just, starting out in investing and they're dipping their toes into the investment market. They want to see what it's about without exposing themselves to too much volatility, but leaving themselves room for, some capital appreciation. It's excellent for retirees who are looking to have a regular source of income now that they don't work month to month and don't receive a steady paycheck. So it's a stream of income that they can count on. Anyone in general who has like a low to medium risk appetite, closer to the low. If you prefer stability over speculation or volatility, then, investing in fixed income / bond instruments is for you, right? Even if you are a, more risk inclined investor, as an investment manager, my advice to that type of investor is always to still have something that balances out the risk that you are exposing yourself to. And in that case, you should, prioritize having a section of your portfolio allocated to fixed income instruments, to bonds. They will offer you a steady return over time while you watch the more, exciting portion of your portfolio try to do magical things. Right? So really, it's for everybody.
Interesting. So if I want to open my account today, I want to, start investing in fixed income today, what exactly or how exactly do I go about it?
Okay, so something that I mentioned briefly earlier is, first, as an investor, you need to understand what your risk appetite is. Not everybody knows the answer to this question. There are questionnaires that you can take. They're not long. Coronation ourselves, we have one that we can provide for people to take, and then they can see where they fall along the scale. And it helps people understand what it is that they want, right? So that they know where they want to be and whether it fits with their investment goals. Now, in terms of the types of fixed income instruments, right, we already talked about them to an extent, but just to expand on them a bit, we have bonds which are issued by the federal government of Nigeria, right? These are considered the safest, and their investment tenor, it ranges from medium term to long term, somewhere between 5 years to even above like 30 years, sometimes more, right? Now, these are the most liquid and the most tradable of all the bonds, right? Meaning, if you buy the bond and then, I don't know, next week or next month or next quarter, you decide for some reason that you need access to the cash that you've used to make that investment, it's fairly easy to exit, right? There's availability of people who want to buy and always availability of people who want to sell. So it's easy to convert your investment into cash at all times. Next, we have corporate and state bonds. Corporate bonds are obviously issued by corporations, large companies, and state bonds issued by state governments. These, they tend to offer a higher return, but, you know, they're slightly more risky than the federal government bonds. They are usually like medium term, 5 to 7, maybe 10 years, but hardly ever longer than that. And they are much less liquid than the federal government bonds. So if you make an investment here, it's much more difficult for you to exit, right? More often than not, you will have to stay up until the maturity of the instrument. Right?
Okay.
And finally, you have, as discussed, your fixed income mutual funds, also commonly known as bond funds. I would obviously strongly recommend the Coronation Fixed Income Fund. It's managed by experts and accessible through the Coronation Wealth app. And case in point, Coronation Fixed Income Fund actually won a global award for their fixed income performance in 2024.
Wow.
So that just shows you how well that does.
Oh, well done.
Now, one of the largest and main advantages of investing through fixed income funds is the liquidity, right? We already talked about federal government bonds being very liquid. Fixed income funds are even more liquid, right? You can exit your investment within 2 to 3 days, whereas with the government bonds, it may take a bit longer than that, depending on if you can find somebody who wants to buy from you immediately. There will always be someone, but it may not be immediate, right? Also, the barrier to entry is much, much lower. You can start investing in fixed income funds from as little as 10,000 naira.
Wow.
Whereas when you're trying to invest in corporate bonds at their first issuance, the minimum is like 5 million. Same for state bonds. And when you're investing in federal government bonds, if you're buying in the secondary markets, maybe 5 million is your minimum. If you're buying directly from source, it may be 50 million. So it can be prohibitive to try and go direct unless you have that kind of volume. And if you don't, fixed income funds offer you the avenue to be able to enjoy the benefits of bonds without having to meet the steep criteria of size, right?
Interesting. If I get you correctly, you mean with just 10,000 naira, I can actually start investing in this?
Absolutely, you do get me correctly.
Wow.
From 10,000 naira, you can start to enjoy the benefits of bond investments.
That's amazing. And so if someone listening now wants to start, so what's the process like? What do they need to do?
Okay, so you can invest through our Coronation Wealth app, which you can download from Google Store or the Apple App Store. Within Coronation ourselves, we have 3 different fixed income funds, right? First is the Coronation Fixed Income Fund, CFIF. Investing starts from 10,000 naira, and interest income, which is accrued, is paid out to investors twice a year, at the end of June and at the end of December.
Okay.
Then we have the Coronation Premium Fixed Income Fund, and this is for investors who have a larger capital base, right? So with this fund, we are still investing in bonds, but we employ a different investment strategy, given that people who tend to have a larger capital base also tend to have different investment horizons, right? So they also would be able to enjoy benefits of bonds, but with a different investment strategy. And subscription into the Coronation Premium Fixed Income Fund begins from 500,000 naira. Here, income is also distributed twice a year, end of June and end of December. Finally, we have our recently launched Coronation Dollar Fund. Now, this fund invests in dollar-denominated bonds, right? So it's for clients who have either they earn in dollars or they are looking to invest in dollars. Maybe for reasons best known to them, they may have obligations in dollars like school fees, medical expenses. They may just be looking to diversify their portfolio or hedge against exchange rate fluctuations. Either way, whatever their reason for doing so, this fund exists. It invests, as I said, in dollar-denominated bonds. And subscription for this starts at $1,000. And just like the other two, the income is also distributed twice a year, end of June and end of December. And you can also visit our website to learn more information about our fixed income funds and all of our other product offerings. We have so much more that we provide to cater to different needs of all of our investors.
Thank you so much, Somkene. The three things that have stood out for me in this session is the fact that 1, I need just 10,000 naira to start this. 2, I can pull out my funds at any time I want to. And 3 is the fact that whatever is going on in the economy does not affect my funds. That is why it is fixed. Please correct me if I was wrong in any of the statements.
You are more or less correct. As long as you stay to maturity, you are insulated from any price fluctuations. Your interest rate is your interest rate, and you stick with it till the end.
Thank you so much. Thank you so much for this insightful session, Somkene. So our listeners, I hope that this has been insightful for you as well, because it has been very insightful for me. So do not forget to share this podcast with your network. Follow us on our social media pages and join us next time for more insightful coronation conversations. Till the next time. Bye.
This has been the Coronation Podcast. Thank you for listening.